Awesome, Angel. Heidi ho, everyone, and thanks for joining us. It is Hump Day. I hope you're having a happy Hump Day so far, and it just keeps getting better as the day proceeds, and we get in some trading stuff. Hopefully, some positive trading stuff and some nice results. That would be good. Few new people in the hi, Lewis, in the room today. Thanks for joining us. Let's see what we can do. Those of you who are here for the first time won't know anything about what I'm about to do. So let me share and explain what I'm about to do. We daily look to trade a breakout of the pound US dollar on an hourly chart. Oh, and I haven't pressed the right button there. There we go. On an hourly chart. Now, two versions of the way we trade this. One is my way, which is trading the high of the three candles that precede London Open. And of course, today that will be this one. And we also trade the low of those three candles. So we're trading short and long, or we're setting an order short and long at the same time. So it's a one cancels other trade. Hi, Paul P. Happy Wednesday to you too. So we're trading either one or the other. If it breaks out to the upside, we want to be in that. If it breaks out to the downside, we want to be in that. There's also an optimized version of this, which suggests that we trade the last 5 bars rather than the last 3. Today, it's going to be exactly the same in terms of candle numbers, but the optimized version, which I'm actually going to trade today, so you guys get used to that one as well. And what we do is we take the high of the 5 bars prior to London Open, 5 1-hour bars, 1, 2, 3, 4, 5. So that's the high. And we enter a long 3 pips above that high. We are already above DR3. Wow. Not thinking that will go too far, but we'll see. The level of that candle is 1.42067, and I'll make that 1.4207, and we will add 3 pips to that. So the entry for the long will be 1.4210. Stop loss will be the low of the range minus 2 pips. So that's the low of the 5 bar range. And its low is 1.41492. Let's call it 1.4149 and take 2 from it. So the stop loss becomes 1.4147. $1.4147. So fairly big range today. TP1, now there is no such thing on the optimized version. What we have to do is take profit at the first support or resistance area. If we're going long, we take it at the first resistance. If we're going short, we take it at the first support. Now, that's going to be debatable as to what the first support is. I'm going to say it's the daily pivot, but there's a couple of levels here. There's one there, and there's also this level here. So it's a little bit debatable as to what that might be, and we need to optimize that within our own observations as well. So the short will be underneath this bar by 2 pips, which will be exactly the same as the stop loss for the long, and the stop loss for the short will be exactly the same as the entry for the long. And that's going to be the case most times, in fact, all times, I would imagine, on this optimized version. So the sell is at 1.4147. This is very similar to what we were trading well before we were aware of this optimized version, I've got to say. Stop loss is 1.4210. There we go. So I'm going to put in targets here rather than, actually I better place the trade first, shouldn't I? Okay, so guys, if you are in here for the first time, you will not know that this has no proven track record. So for that reason, you need to trade it with micro lots only. nothing more, because we just don't know at this point what is the best way to trade it. 1.4147 is the entry for the short, and the stop loss is 1.4210. And Vicky Verky for the long. So there's the short place. The long will be a buy stop. At 1.4210. And the stop loss will be 1.4147. Now, those of you, again, here for the first time, if you want to know my version of this, it is trade the top of that bar, rounded up to the nearest pip, with the stop loss below it, and we take profit at half of whatever the risk was. I'm getting really complicated if you are here for the first time, but that's the way she works. So in this case today, the risk would be 42.08, 41.67, let's say. So the risk on that is 30.41. We would take half of that, let's say 20 pips, and we would make that our first take profit. So that would be, I forgot what it was now. So many things to remember. 41, did I say? Yeah, 20 pips, right. So 20 pips is there, 1.4228. That would be my first take profit, at which point you'd take half off. And the second take profit would be double the risk. So in this case, whatever it was, 40, so it'd be 80 pips, 80 pips of, 82 actually. And we would take more profit there, and move your stops to entry, and then we would trail on 2 bars. We'll see which works out. Now, the targets here, right? I'm going to set a target. First support is DR1. So we're going to take profit there for the shorts, and first support for the long is pretty obvious. It's going to be that high. Resistance, sorry. It's going to be that high. So take all profit there, take all profit there. No mucking around, just get it out of the market, get it in the bank, and away you go. All righty, guys. Now, a couple of updates. Those of you who are or have been trading with me for the last couple of weeks, and I think we're still in some from a couple of weeks. We're certainly in EuroCAD. Now, I haven't got it on this chart, but we let me refresh my memory on EuroCAD. EuroCAD. There we go. There's the order. So we sold at 1.5394. We're now at 1.5290, but that's still what, 85 pips from where we need to be for our first take profit. Well, 89 now, getting closer. As soon as that's hit, we will take, same as always, half off the table, move our stops. What is it? 53.94, 52. What's that? 189 pips from entry. Okay, that can't be right. TP1. Sorry, I'll make that right. 52.05. Yeah, that's right. Okay, all good. So that's what we'll do, and we'll make that a little bit safe. We'll make it a completely safe trade at that point, and our target area is down here at 1.44. So that's still going. We were taken out of Aussie Kiwi this morning on the back of the Kiwi news, which of course was interest rate announcement. We were hoping to get a nice ride on the back of that, but alack and alas, it went in the opposite direction. That was, of course, a break-even trade for us because we were free trading it. Sadly, the interest rate wash up if you like, has gone in the opposite direction. Our trailing stop has been hit. So we've got Euro Aussie, Aussie dollar still going. Aussie dollar well in profit, of course, and our trailing stop is underneath the weekly pivot here at about 77.95 or something like that. So we're banking more as we go. I'm going to leave it where it is in case we do get a decisive or a strong, if you like, retracement, and the weekly pivot holds us up. That would be fine. That's why I've got my stop loss there. I will keep that there until such times, probably as the week ends, if we're still in the trade, of course. And that should, if we are still in the trade, move up, we'll move our stop loss up accordingly. So we're really trailing the weekly pivot at this point on Aussie dollar. I did place an order this morning on dollar yen, and I placed it short underneath this bar. That's applying a liberal dose of price action repellent, as I call it. And of course, price action has gone in completely the opposite direction. That doesn't really do much for me in terms of changing my mind, but obviously it'll change my entry, one would think, because I think there'll be a far better entry if we do find a short up here somewhere. This is based primarily on trend. And the overall picture here is undeniably we're in a bear trend. This level here is very, very interesting. And I went through this process this morning with a lot of those of you who watch in the Telegram group my analysis each day. I was talking about this level, and this level's super, super strong. And no surprise, of course, to see that we're reacting off it. Where we end up is anybody's guess, but I considered that we'd had a test of that trend line. But, you know, isn't hard to say. It's all but on the monthly chart. And I figured, and certainly at the end of the month, say next Monday or Tuesday, if I see this bar as a high test bar off that trend line that has got a white body, as it does currently, I will probably look to trade that on a monthly basis, because I think this is, well, I'll call it a continuation of trend. We've snuck below that level, right, of all this support, and we were retesting it, probably a reasonable place to think short underneath that bar. But I think we'll probably get a better option. But of course, if the dollar does continue to strengthen, which I doubt seriously, but there you go, anything can happen, then I'll be looking for a false break of this trend line. But I'm still keen to get short. And I hate dollar yen. Everyone knows I hate dollar yen. But I'm still trying again to get it. I think now is probably the time to cancel that short. So let's do that. Let's just get rid of it and look for a better entry. I think that's probably wise at this point. That may come with this candle. If it is a high test bar on the weekly pivot, that would make perfect sense to me to trade underneath it and get some profit in the bank before the monthly pivot arrives. The only other trade that we are still in is dollar CAD. And dollar CAD are struggling, of course, to get through these lows, but if it does, then I think we've got a very, very good shot at getting 122.78, which would be a pretty good result based on the risk that we took, which was what, 80 pips. And if we can turn 80 pips into 126.75 into 370, I'd be happy with that, but it may not be the end of it. This could well go for a long, long way. Some people would say that the dollar is due to rally, and if you looked at things like dollar Swissy, you'd probably be on the back of that. I'm not necessarily, but Ash, you're a fan of the dollar, aren't you? How you doing, bud?
Very good, mate. No, absolutely not. I think the dollar is the dollar is dog food.
Yep.
But there is, just talking to trades, there is a trade on the FTSE which is setting up pretty nicely at the minute. So let's see if we can get into this. So there's a few things I like about this, but firstly, I mean, the big picture. Let's start there, because what we've got to try and get is this daily pivot, and the reason for trying to get that daily pivot is, well, firstly, it's untested, and we don't like those anymore. But the second thing is that it looks like there's a little trend line here as well, which I wouldn't mind just seeing that pop up to. This is only on a 15-minute chart, but if this was to play out, then there's lots and lots of confluence there. I'm going to pull up a fib as well and just check it out now. That's the full range, and look at that, 50% as well. There's lots in here.
Lots to like about that.
Yeah, lots to like. And this is the other thing about this is that the fib is the week's range so far. So there's a lot, as you say, there's a lot to like in here. So let's see, we've got 6607 really. So we're about 17 pips away from this particular price point. Little price point down here as well. When we bring this into slightly longer term timeframes, this is a difficult trend line in many respects, because there's a lot of tails here. But if we were to look at the closing values here and here, then you could say that there's a potentially a trend line there as well. I don't love that. Let's take that away, because that's slightly down to interpretation. But this one's better. It's a lot cleaner. So fib, trend line, daily pivot. Now, when we look at the big picture here, what I'd really like is to get this at 9 o'clock UK, and it's currently 8 o'clock UK. So I'd really like to get this closing in this area without it popping through. You can see the monthly pivot is an issue. So we've got to get through there, which is why I'd quite like to see it have a go here and prove that this is the area it's going to turn. I think it is. I mean, there's enough confluence there just to take that trade. And then if it
Why
pops
9
up,
o'clock, mate? Just out of interest.
just because it's the top of the hour. Really, that's all it is. It's the top of the first hour. So, I mean, if your question is, could it be 10 o'clock instead of 9 o'clock? It could, but the issue will be that we might have gone, because we've got so close to testing it now, that this might be the end of the test. And that would suggest that 10 o'clock might start becoming a bit too far away. Really, we want to be getting into this really within the next 45 minutes. So I don't mind if it gets in a bit before 9 o'clock, but I just quite like hourly bars that close on the area. I really like those, because especially if it's tried to get through before. They just tend to sort of give quite a nice clean entry. I really like selling on green bars rather than on a red bar. The red bar looks like it might give us a...
Yay.
What's that?
I've got a mate.
What, the sells on a green bar? Yeah. It's I find it better, but I'll sell at the top of it. I want to try and sell at the top of the green bar. So as soon as it closes, I want to try and get into the downside. But as I say, maybe it's already down 0.5%. Might not get the opportunity, mate, but we'll see. There's no point in going in too early. Monthly pivot should hold this up. I don't see why it wouldn't. So a little bounce here, back up to the upside. Give us that daily pivot, or maybe the high. That's it's within 5 pips. So give us that high one more time. Then I'll try and take that trade. So FTSE looks good. So we've got a price point. We've got a time. If it's at 9 o'clock, all the better. Yeah, buy the red, sell the green. That's what I'd prefer to do, but I prefer to kind of do it as it happens. And this is the kind of example I'm talking about. Look at this green bar here, and because it has stopped on top of a trend line, it wasn't able to go through. That to me is a really good place to sell. That's the kind of thing I want to see. I want to see it try close around about the on the trend, and then get us in. So if I can get that, I'll be all over it. But not too sure whether it's going to happen.
plenty of liquidity in that area too, because
Yes.
you've got the daily pivot, and you've got people who would be screaming, jump into that
Yes, and
because
look
it's
at this
closed on
too,
its
mate.
own.
This is the broader picture, and I think this is the thing about the FTSE. I mean, the markets are weak at the minute, and it's always harder to sell. But as I've been kind of really going on about for quite some time, those bond yields are starting to get tenuous, for stock markets, and they keep going up. The 10-year keeps going higher, and it is a really good signal. I think that these markets are overvalued, but we do have this as well, and I was looking out for this, and it's pretty clean. So because we've got the head and shoulders pattern, which looks like a neckline around about there, basically trying to pick it up around about the right shoulder area. And there's two ways in. You either go in on a short-term time frame, or you're going on a longer-term time frame and put stops up at this level. But if we can get it on the hourly, that would be fantastic. We can use this high instead, aim for the lows to take our first profit, and then see what happens. But interesting price action, mate. On some of these, I really want to get the Russell 2000. That's the one I'm really after. If I can buy the Russell, then I will. Is the Russell 2000 here, and I've got an order quite a way down at the minute, so I'm not sure whether it's going to give me that opportunity or not. But let's have a quick look through on these charts, because we got a bit of a better kind of view on these charts. Bitcoin pops itself back to the upside again after yesterday's sell-off, but I'm not sure whether that sell-off's over just yet. I think that's probably going to take another dip down to the downside. Gold, we're going to talk about gold soon, aren't we?
Yeah, Ainsley will be in.
Yeah, so I've got some gold to the upside, and it's moving slowly. Inflation may pick up, so let's see if that goes. I've got some other positions on. I've put this order in with silver, but I don't know why.
She's been a bit quiet. Sorry, mate. She's been a bit quiet on that level. I thought she might have been interested at that level, but I haven't really heard much from her.
Well, let's have a look at it. Yeah, I really like this level, mate. I mean, it's that's what I'm seeing. I've got a weekly chart which has got a trend line. I've got a bit of a turnaround. Definitely some horizontal level, a horizontal line of support here as well. But I'm going to pick up gold all the way down. If it decides to fall further, then I will be able to find another trend line which I think I can trust just by moving that down a little bit. That will run into this particular area here. So I'm quite happy to build into a position with gold. So I want that. I want WTI. Actually, WTI is just a little bit off today as well. So I'm going to try and build into that position as well. Do you see that there's a little trend line there? Maybe a little bit steep, but it's still a chance to get into that. There's Ainsley there. So yeah, actually, there's her two specialist subjects. We kind of get onto here. So yeah, both oil and gold. I'm interested in trying to buy. The yen has surprised me. I have to say, mate, the yen has really surprised me. And what's been interesting, I've just heard about the yen, is apparently they've capped those bond yields. So where the US 10-year has started to move up, the bond yield has started to move up. So that just so everybody understands, when people go out, when fund managers go out and buy stocks, they have to have a discount rate. They have to have a return that they need to get back to justify buying that stock. And they use the 10-year as a discounting mechanism. So they have to, the stock has to outperform, because we're talking about free cash flow, and free cash flow is effectively the stuff. It's the stuff that you have. It's the money that you have at the end of all the expenses. You get free cash flow, and that's how dividends and things like this get paid out. So what companies will need to generate is beyond a percentage beyond the 10-year. Because the 10-year, as I say, is used as a discounting mechanism. So they want to beat the 10-year because the 10-year or a treasury is safe. It could be a different treasury, but people tend to use the 10-year. So the 10-year yield is safe. That's pretty much what people would consider guaranteed money. So you've got to be able to make sure that you beat that by a bit of a distance. So that means that when the 10-year goes up, the amount that each stock has to beat the discounting mechanism by has also gone up. So any stocks that have fallen into just on the level with the 10-year yield maybe 6 months ago have now fallen below it, and which is why tech stocks and we're starting to see that sell off in those tech stocks. So watching out for that 10-year. I can't remember where I was going with this, to be honest, mate. But watching out for that 10-year is really important.
You're getting like me, mate. Craft's the bugger of the thing, you know.
Yeah, exactly. But the inflation, looking at maybe that's where I was going with it. The inflation is also going to be quite important as well, and bond yields don't tend to help gold. There's because of the kind of when bond yields start to go higher, then the safety is somewhere else in a way.
Yes,
but
I mean that makes sense, doesn't it?
Yeah, but it all depends on whether those bond yields are above the rate of inflation. Because if they're not, then there's no reason for gold not to still perform well. And if inflation kicks up to 2% and the bond yield's giving you 1.3, 1.4, then obviously the real rate of the bond is 0.6. So that's why we might still see a gold rally with the 10-year going up, and gold's grinding its way up, and the same with oil. But oil looks at this level like it's that's where I was going with it, mate. That's where I was going with it. It was Japan. I was talking about Japan. So Japan are capping those yields, which will potentially suppress the yen. And if it suppresses the yen, then it means that those exporters are going to do better out of it. And the exporters do better out of it. Then you look at the Nikkei and you say, okay, well, the Nikkei out of the indices is probably the one to outperform against the other indices. So where it's not going to help the Nasdaq, it should help the Nikkei, which is
that disappoints me, because I was looking for some yen strength coming in, but sounds like not.
Well, no, do you know, mate, this is I literally heard this 5 minutes ago, and I haven't dug anywhere near deep enough into it. And we know that
the charts are telling me that anyway, you know.
Right. Yeah. I mean, they are, aren't they? Look at that. It's right on the level, though. Look at that on the weekly, on the Aussie yen. That's a pretty significant level. But yeah, we get through there, then we're looking at the next one up, which is going to be up there, isn't it? Probably. That looks a very strong level, though. You think we get some retracement, but yeah, it's been fairly unabating so far, isn't it? The move against the yen. But if the fear really starts to kick in, mate, then I would still expect to see some yen strength. And looking at the VIX, VIX is actually pretty benign. Hasn't really done a lot. It's been a strange market, mate. It's been a really, really odd one where not everything is thundering to the downside. Look at the Nasdaq. Absolutely plummeted from its highs. The FTSE a little bit different. The CAC is still in pretty positive territory. Hasn't been a global equity sell-off by any stretch, which does mean that the opportunities to buy right now are probably in the Nasdaq. I
wonder if the Facebook story is, and I can't imagine. We've had a Facebook story in Australia for the last few weeks. Mm-hmm. But I can't imagine it's on a global scale at this point and affecting the Nasdaq. It just doesn't quite make sense.
Do you know what the story is, by the way? I think this is rotation. I think that what we've had is a big move in growth, and now we're going to get a big move in value, and that's why I think the Russell 2000 does well in the next phase. Because Jerome Powell basically said yesterday that everything's still accommodative. Apart from that 10-year bond yield, there's still plenty of liquidity and support for the economy. Support for the equities out there. But I just think it might be a case of rotation. The growth kind of picture is not looking quite as rosy, particularly with that discounting rate. But the growth stocks like the more domestic names that you'll find on the Russell 2000 should do pretty well. And it's been interesting because the Nasdaq from its highs is currently down around about 5% from its highs. But if we compare that to what's been going on with the Russell is maybe three down, and actually still looks like it could be popping higher. That's held fairly well.
We've really got to take into consideration that the Nasdaq's just been ridiculous, and
yes,
the higher they go, the quicker they fall sometimes. And of course,
yes.
those who have been in the Nasdaq and been in it for quite some time are pretty much due to take profit. So maybe that's what we're seeing. I don't
well, yeah, as I say, mate. Well, the thing is that they will be taking profit, because if we think that everything is most of the stuff in most of the stocks that really start to thunder to the upside with the Nasdaq are stocks that are speculative on profits, because a lot of those stocks still aren't paying dividends, so people are buying them for future earnings. And if the discount rate is starting to increase, then those earnings in the future potentially are going to be coming down. So it makes a lot of sense to now start to take profit on things like the Nasdaq. I don't think we're going to get this FTSE trade, which is quite which is a shame that the FTSE is looking really weak here. Let's have a look. Oh, maybe we will, mate. Maybe we will. Might still get an opportunity here. So definitely after a FTSE sell-off here. Yes, Tesla's in the Nasdaq. Yeah, and Tesla was down quite significantly, as far as I'm aware, yesterday. What was it down? Let me see. Tesla, and it won't help Elon Musk if Tesla and Bitcoin fall at the same time. But he did talk it down. Oh gosh. There we go. So Tesla was down yesterday. QRST. Actually, only 2% yesterday, Tesla, but from its highs, it is currently down by 25%, 26% is down since its highs, which was only on the 21st. Is that right? On the 26th? Oh, sorry, that was last month. Yeah, since the start of this month, effectively, it's down 25%. But as we know, Tesla has been gone. It's gone up by this year. Actually, from the start of last year, it's gone up by 1,000%. So for it to lose 20%, it's not a big problem.
I think he's okay.
Yeah, I think he's all right, mate. Yeah.
If you got forget what's his name, Elon Musk.
Yeah.
If Shukri's talking Bitcoin down, there's only one way it's going to go, isn't it? Short term. Don't get me wrong on that.
Yeah, and hopefully it does. Hopefully it does. Hopefully it does flush some people out. But this is the thing about this stuff, is that the Nasdaq does look incredibly it's under pressure. But we've been a lot of these Nasdaq stocks are still attractive. There's still really attractive stocks. I mean, look at this on the weekly chart. This doesn't really look like much, does it? We're talking about kind of big moves to the downside, but actually, any sort of professional investors, they're not going to be bothered about a move like this on the Nasdaq. It's got to be at least a 20% drop from the high for them to be in any way, shape, or form concerned. I mean, it's down as I say, it's down. It's not even 5% actually where we closed yesterday. So far we haven't really dropped that much.
Mate, if it drops down in Australia, it's not a P1SS in the ocean. Simple as that.
Exactly. Yeah.
Lewis, I will answer your question shortly, by the way, on pound kiwi.
Yes,
and it's a really interesting chart, I've got to tell you.
The pound kiwi, yeah. I find that again. I find the pound really interesting. Look at this last week's bar on the pound, certainly suggesting that we could get some downside. And I think we've seen that the pound against the yen surprises me hugely, but maybe it's more of a yen story. The Aussie does also surprise me. It just has not been able to go down, has it? Every time it looked like it was falling, it drops. But there are wild moves in the pound right now against some of these currencies, and I wonder whether that's going to be quite telling and quite indicative. But the vaccine story continues to be positive at this particular point, and I suppose it's again, just like we saw many people kind of buying up the likes of Tesla because of or the Nasdaq because of speculation. And now we actually get the realization people sell it off. I wonder whether that might happen ultimately with the pound. Speculatively, we start to move to the upside after Brexit, but when things start to filter through, maybe the pound will weaken again at some point. But it looks pretty strong right now.
It's looking very strong.
It does. Hi, A. How you doing?
Hey,
Hi,
Ainsley.
guys.
Hey.
How are you?
Yeah, we're good. We're good, thanks. We're good. Yeah, well, let's take get your opinion on this, Jeff, and then we got some opinions to pick from your brain, Ainsley, about gold and oil.
Gold, oil, Aussie,
Okay.
yen, pound.
Oh,
Liking
gosh.
all of
Yeah,
them.
all those things. Excellent. The golden lady. Look at that. My God. Okay, I'll very, very quickly go through. Well, I won't go very quickly because it's
take your
quite a
time.
complex issue. And then we'll go to A.
I've got my Sauv Blanc. I'm good. Take your time, Jeff.
Awesome. That may
Goodness.
mean you're not going to trade, I think. But then again, you never know. Right, a pound Kiwi. Let's have a look. Look, this is all sorts. It's really all over the place, Lewis, to be honest. Yesterday's bar, fantastic bar for me. Absolutely perfect. I'm trading that 9 times out of 10. Guess what? I didn't trade it. Reason? Look at that. That's a super strong now support level. You put it, there's a cloud of a price through there somewhere. But let me go through the do's and the don'ts here. You've got a big double bottom sitting here. You've got a neckline break after a higher low. And now you've got another higher low sitting here. How can I trade that short right now? I can't. I just can't. But, if I wanted to, that would be the bar I'd want to trade. And of course, that high has now been taken out. But if you look at this, bigger picture stuff, go right out to the monthly pivot, which is where we live or have been living a lot. We've kind of been sweating on this to come back inside this range, right? Look what we got last month. We got a beautiful tweezer bottom sitting here. The question is that the strongest level that it could have found? And it's not too dusty, I've got to say, but it's not the best. I really considered trading that on the monthly chart last week, and I think there was far worse trades to take. The news today on the Kiwi, that's knocked it around a little bit, but I think what that may do is actually give us a better price if we are thinking of trading this long. This is the big picture I'm seeing at the moment, and I'm finding it very, very difficult to trade against it, Lewis. That bar yesterday, as I said, it really got me. I really want to trade that, but I'm seeing a double bottom. I'm seeing a higher low. I'm seeing a break of the range, a break of the neckline, a retest of the neckline. To me, this is going that way. And I can't get it out of my head, sorry. If you want to go along with that, fine. But I can certainly see why you'd have a case for the downside as well at the moment. But yeah, longer term, I think this is, if it comes back in here, certainly we're going places. I can't see why, as you've just said, Ash, I can't see why from a fundamental point of view that the pound could outstrike the Kiwi, but I've seen a lot of signals that saying it can from a technical basis. So, Lewis, that won't help you one little iota, I don't think, because big picture I'm long. But yesterday I saw this little candle that I'd love to trade short, but I'm just not, no, I can't see it. I can't enter there. Sorry. Hope that helps. Probably confuses more than that.
Yeah.
Okay, Ainsley, you got a truckload.
Yeah. So start offloading
What did you
this.
say about that, Ash, by the way? Sorry.
About what, sorry?
About pound Kiwi. What do you think about that?
Oh, do you know, mate? I think the same as you. I'm struggling to get a strong opinion about the pound's rally. Well, in fact, maybe that's the wrong way to put it. I'm not convinced by the pounds rally, if I'm completely honest. I just don't I don't buy into really what's been going on with the pound, but maybe there's just no catalyst to turn it around, and that's why we're not seeing it come down. There's no spark paper as yet. Maybe if Governor Bailey comes out and says something, that's maybe what we need to garner, what we need to hear. But the pound and the Aussie, I get the Aussie. The Aussie makes complete sense to me. While the Aussie's rallying, it makes complete sense to me. But the pound, I don't really get it. Apart from that kind of tension.
But isn't the Kiwi in the same ballpark as the Aussie?
It's not moving as well.
No, I mean are the fundamentals as good for the Kiwi? I don't think they're quite as good as the Aussie's fundamentals are pretty solid, aren't they?
I've got to say, if I'm presented with both, I do tend to go with the Aussie because they're the volume. The volume on the Aussie is always going to be more than is traded on the Kiwi. It's considered the weakest of the majors, and some people won't call it a major; they'll call it the Aussie, the Kiwi a minor. But it might just be my bias anyway. I don't know about you, Jeff, but if there is if there are two there, I will go. And sometimes percentage-wise, the Kiwi will rally more than the Aussie, but it's the fundamentals that I understand that gives me the understanding to go into the trade in the first place.
And they're pretty good for the Aussie, aren't they, Ainsley? The fundamentals for Australia are
they're pretty good.
I think for me, Ainsley, if I am, and I don't trade Aussie Kiwi much, but if I see Aussie Kiwi at 110, I'm short. If I see it at 101, I'm long, and that's pretty much where I'm at with Aussie Kiwi.
Yeah,
I think it's a perfect range.
And the population down in Bondi swells when it's when it's at 110, and when it's at 101. They all go
more Bondi.
Yeah, well, I mean that is a factor though, surely. I mean, but because there's a lot of trade done between the two countries, and interesting, really, what you're saying about that, Jeff. Because I wouldn't be surprised if you started to look at shares at that particular point. Exporters would do really, really well when you've got the strong, exporters from Australia would probably do very, very well with trades with the key, any exporters that have got very direct access to the New Zealand market would do pretty well when the Aussie's a bit weaker, and vice versa. I probably more than
we're their major trading thing.
Yeah. So actually, New Zealand, I bet it's that way round would be the way to do it. Look for New Zealand exporters when the Kiwi is weaker against the Aussie to do well. I don't know how you get access to that stuff, but I would have thought that'd be a pretty binary trade. You could even hedge it out with some buying of the Australian currency as well.
Okay, two facts about New Zealand. One, you're talking about a population of about 5 million people, which if you digress very quickly, Paul will then highlight to you the fact that they're only a population of 5 million and still managed to whip our ass at the rugby union. Two, and
don't trade that way.
Yeah. New Zealand actually used to be an outer suburb of Sydney. It used to be part of New South Wales.
Oh, really?
Back in the 1800s, if you saw a map of Australia and New Zealand, it was actually not an independent country. It was part of Australia. So there is that really strong, and they consider it sort of like the pseudo state of, out of New South Wales, out of Sydney, out of suburb of Sydney.
Oh, that's quite a good historical fact, that, Ainsley. I didn't realise that.
Actually, I've got to say, I didn't realise New Zealand was as well connected to Australia until I was helping my kids with a project in primary school. It's not something that they highlight to us.
Yes.
But yes, so there you go. New Zealand used to be part of Australia, and then in the 1800s, I think even if you looked at a map in 1836, they were still part of Australia. But there are only 5 million people in the population is 5 million. It's not a big country, but gee, they pack a lot of punch.
They certainly do. They punch well above their weight.
They do. And rugby
In
aside,
fact,
cricket
it was
aside,
Tasmania or New Zealand, one or the other.
Tasmania
And I chose
wins
Tasmania.
the Australian prize as far as produce goes. They really win. Hands down, is Tasmania wins on a lot of levels. And apparently fabulous bamboo comes from Tasmania as well. So you get that. But when it comes to the Aussie Kiwi, yeah, it's quite sensitive for those reasons. There's a historical value, but the fact that is the Kiwi is so much it's Sydney and it's sprawling out of suburbs. Sydney's population is 5 million. So, we're talking about a country about the size of our state's capital. There you go. But yeah, that's why you've got that sensitivity between the Aussie and Kiwi. And, as simple as Jeff said, when it gets to 101, you go along. When it gets to 110, you can see the money. And it's very sensitive.
And there's that range there, Ainsley. There's that range there, right?
Yeah, there you go.
That's 101. That's 110.
Hello.
I rest my case.
Yes. Yes. Oil. Could you flick up an oil chart, please?
Your turn. Oh, you on an oil chart? Bloody Nora.
You do one for me? Which I'm going to make you do things. I could do it yourself. It's just like you're there and you got it going. All right. So oil. Okay. Hello.
There you go.
There we go. So we had a bit of it hit 60. Oh, it got 63 on yours. What are you on? Fusion XTI, not WTI. Okay, so they're futures based. So it did pop above the 63 mark, but on the non-futures price, it didn't quite make it to 63 yesterday. It's up there. Okay, so it's liking it and it's going to keep going. The Texas freeze, the big freeze. Julian said on Sunday night, yeah, who cares? Let me tell you, there's the 4 major oil producers actually care because a lot of their equipment got damaged in the big freeze. A lot of things got snapped, broken, and it's not a matter of just flicking on the switch and they go back to oil refinery next week when it gets a little bit warmer. It ain't happening. The supplies are there. The coronavirus story is looking good. It is, like I said, and I'll keep saying it over the weeks, as the exponential rate is falling. It's no longer going, despite there's been 500,000 deaths in the US, those death numbers and those tolls, if we're just looking at data and statistics and not the human story just at the moment, it's looking better.
Yes, it is.
I don't know how you actually frame that apart from the fact that they're rolling out the vaccines. It's happening. It's getting better, and which is the vaccine story. And your fearless leader, who looks like an unmade bed at the best of times. Sorry, Ash. But the vaccine story is working for the British pound. It really
absolutely is.
Along.
Yeah, absolutely. Do you know what? What you're saying about Boris Johnson, it does look like an unmade bed. He always has. But I've never had. Well, I've not had a great feeling for Boris Johnson being PM. But in the last month,
neither has his hairdresser.
He's the PM. I don't know why he can't get his hair cut. I'm struggling to get down there, but I don't know why he can't just get someone pop round. But yeah, in the last month, he really has shown some
leadership?
Stately. Yeah, he really has. He's it's a tricky one because there's obviously more than just one policy that makes a government and a prime minister. But I think if there was a vote now tomorrow, he would probably come out on top. And it fluctuates all the time. But yeah, he's done. He's actually. I think he's handled this so far. He's handling it now. He's handling it pretty well. Yeah. But that can change. That can change because they might go too fast. Coming out of this.
So true.
The cinema cone he needs it. Well, and a pair of scissors probably. But yeah, coming out of the this particular situation is going to be tenuous because we've got the vaccine now. Many people have been vaccinated, but there are still dangers and whatever. They're talking about passporting for bars. Will that be something that they'll stop people going into bars if they haven't either had a vaccine or a test. I don't know, but they are talking about stuff like that. And there's still a lot of questions to be answered off the back of this. But right now, he's doing well.
He's doing okay because he, as he said, he's shown some leadership, and in a crisis, that's when a leader is going to shine. Not with all the other, which is why we've got the infighting. And in Australia, we've proven this point. How many times have we seen a change of government because no real crisis? But at the moment, nobody's challenging Scott Morrison. Nobody's challenging any of the premiers in their own little, and let's call them fiefdoms here in Australia, because, you know, somebody has a sneeze in Queensland and everybody else goes bang with their borders and everything's shut. But it's the same kind of thing. It's when it's really hard and you show some leadership and you get some direction and you feel like they're coming out of it, that people get behind it and feel some optimism. And it's the optimism and consumer optimism and it doesn't have to even be real. It's perceived.
Absolutely right.
It's the perception that's going on that will move the momentum along, that will get things going back in the economy. So all we hear is Boris has got, you know, even over here on an international scale, we're hearing things are going well in the pound, for the pound, because their vaccine program is rolling out really well. Whereas here we've just used the rest of the world as a guinea pig to see how the vaccine rolled out, because we're not in an emergency situation.
Yeah.
It was good. Yeah. That worked.
Well,
got an idea.
Yeah, go on, Jeff.
Ash, something you just said tweaked something in me, and I want to know.
Boris?
Sorry, eh?
Co for Boris?
No.
A bamboo cone.
No, it would be a sheep shearing attachment rather than anything else. But
the mullet. They're bringing the mullet back.
Yeah, why not? He'd look far better.
No, they are, Jeff. They are.
Yeah, I've seen it. Yeah. I'll bring a picture in one day to show you. And yeah, it's not terribly flattering, but you know. Who produces microchips for dogs and cats?
Who produces them? Which company?
Yeah, is there a world authority on that?
Oh God, I don't know, mate. I don't know.
Intel, or is it Nvidia, or people like that?
Microchips for dog. Well, the stuff you put into a dog and cat so the vet can.
Yeah.
I suppose
you were just talking about providing passports to get into pubs.
Yes.
Right?
Yes.
Well, expand that a little bit to, okay, let's cross borders, and have you had a vaccination against
to go to a bar?
COVID-19? It's the next thing. It will happen. It will happen one day. I've got no doubt about it. We will all be microchipped.
They're talking about an app that you can have on your phone with your ID.
Yep.
And your vaccination details.
Same thing. Well, a little bit less invasive, but
no, I don't think I'll get lost after I've been on a pub crawl. I'm pretty sure about that. I think I'll be good after a pub crawl. I don't need to be microchipped and scanned by the vet in case.
But what if you wanted to travel to the UK, for instance, and
it'll be on my passport. There will be.
You can forge passports. That's easy. Anyway, that's way off the point.
I just thought I'd bring. Excellent.
I think that is a fair point, mate. But you know what? The thing is with the thing with the vaccine right now, and the reason that it can't work just yet is that they can't force you to take it, because what they're effectively going to do is say, right, take this thing, because the vaccine's made people very sick over here. So in some respects, so take this thing, which is going to make you feel really, really ill, to stop you getting ill. And I don't think they're going to get away with it. I don't think they can force people to do it. They won't do that in the UK. They will absolutely not get away with forcing people to take it in the UK.
And all the more reason to have a foolproof screening device.
I agree.
They just don't have. And this is what I don't understand. This last weekend just gone, Ash. This is just I just don't understand this. So. The vaccine started here on Monday.
Yeah.
They are not compulsory. There were protests from people saying, no, my body, my choice. I was just like, well, why are you protesting? You don't have to have it. But Qantas says no jab, no flying.
Right.
And for frontline workers, the government is also saying no jab, no job, because they see it as, if you're a frontline worker, you're in a position of sensitivity, or you're likely to get it. But they are also saying, sorry, if you don't want to have it, we will redistribute you somewhere else.
Wow.
But they're not saying you can't have it. It's just that you're in a frontline workers. They're in a they haven't had anybody on the front line that has said no, because I guess a lot of the frontline workers, especially in hospitals, have seen the effects of COVID.
Yes.
You're making a very good case for me, Ainsley.
What, to have it?
No, to have a chip inside you.
Yeah, no, you are. Yeah, you are. I was about to say, actually, that does make sense. And Jeff, do you know what? But why? Yeah, why not? Why wouldn't they do that next? Because we're talking about, this is just more like technology, which kind of IDs you effectively, isn't it? I mean, it's, there will be huge protests around it, but if world leaders got together and said, this is what we're going to do, everybody will have to do it.
I could track my kids a lot better.
Watch this space.
Yeah.
Anyway, sorry, I do get off the track.
So we've had oil.
Oil.
Yeah,
I think we're just seeing a consolidation here. I think it'll pop up. It's just ranging at the moment. It's been strong. There's been actually a just with the supplies at the moment, they're a little bit on the higher side than they expected. But obviously, with everything coming back online, the stimulus package coming into play, and people seeing this going up the ramp, we're going to see it getting kicked back into gear. Like I said, there was $1 million, 4 million barrels a day taken out of production over these last couple of weeks through Texas alone.
Yeah.
So that's having an impact, and that's having a bit of grip. That's why you're seeing these big moves. That little dip back down was aided and abetted with the Saudis saying that they're actually deciding to lift the restrictions to help the US with the supply. Now, the problem with that is, if the Saudis decided they're going to race to the US to their aid with supplying them with some overpriced oil, no doubt, there's going to be a few other countries that want to get on that bandwagon as well and lift their supply, lift up their restrictions to get across to sell to the US, who are in a bit of a situation. So we don't want to see what we saw last April, where everybody ignored the quotas, and then there was a lot of chest beating, and then we saw that plunge, that huge plunge. We don't want to see that again. But hopefully this will just stay on track. And I think this is a bit of the rhetoric that's happening politically, geopolitically with oil and a bit of argy-bargy. That's why we're seeing this in a bit of a range at the moment. We saw a very distinct, straight up rally, but now it's just and it seems to be very sensitive, as oil is, to any news releases and things like that. You see that oil, hang on, you see that oil could drop before the move up again. Don't know, Lewis. So Lewis has just asked, do I see if oil will come back again? It will drop before another take up. Don't know. And why I
hope it does.
Because you don't know whether the Saudis say, oh, sorry, we accidentally blew up a Russian refinery or two because we're trying to sell to the US. You don't know with those kind of things. I know that's extreme, but it's really fundamentally sensitive to that regard, with who's doing what, who's lifting what restriction, and to what degree as well. I don't think Texas is about to come out of the deep freeze. And as I said, it's not a matter of, okay, a lot of their equipment with the freeze, snapped, broken, and popped. Basically, it is not a matter of look, fly the part in, and we'll, she'll be right, mate. We'll get it sorted, and we'll be pumping in a couple of days. It's not the case. It's going to be taking weeks, if not months, and we're talking so far 4 million barrels of oil a day, with the potential upswing of other countries like like Britain starting to come back online, and we're talking about a couple of months in advance, especially with oil, everything coming back online again, and the demand increasing, and that demand can increase and, as we've seen, drop off in a week. We've seen that in the last year, that demand can stop almost like that on a dime, and it's just the way it is. So do I see a pullback? Yeah. Look, it hit a level, it went to 62.98 or something like that, and it retraced and came back down last night, and it's just sitting there, and we might see an inside bar while it thinks about it. It is Wednesday night. It's no, there won't be a surplus in the market at the moment. It's all being soaked up at the moment, Lewis. As far as a lot of the pumping is going, we're just going to see where it goes to from here. We'll just need to go with the next one. Texas is out of the picture for a little bit. Canada's still pumping. Everybody else is still pumping. Let's see how we go. Gold is an
Ainsley, before you, just very, very quickly, one thing I did notice with this chart, once it goes into trend, it seems pretty reliable.
Yeah. Oil like gold.
Broke above the monthly pivot, buy.
Yep. Bang, bang, bang. Up it goes. Thank you very much.
Back to the weekly pivot. Stop loss.
Yeah, and if you drop down onto a 4 hour, you can see it
here,
going.
Stop loss buy. Looks pretty reliable.
Very reliable. That's why I like trading it. I like logic, rational behavior, even with the Saudis involved.
You do not tell the truth. You don't like rational behavior at all. Oh, you mean in the charts, right?
Okay. So what about gold then? So we're looking at.
Oh my God, gold. God love it.
Because I bought some gold, Ainsley, and I like the level we're at.
Yeah, look, blimey, Bill. So gold. I read 2 reports within 5 minutes of each other. One said it's going to 1750, and the other said it was going on its way to 2000.
Yeah.
Credit Suisse, and the other one was I can't remember, but it was 2 reports, and within 5 minutes I opened it. It was just like, seriously? Look, gold doesn't know what gold is doing at the moment. It knows it should be higher. It should be. I wish I was in copper instead of gold at the moment, to be quite honest. But that aside, all the precious metals have been on an upswing at the moment. Why gold is not? And one of the commentators I heard on Bloomberg the other night, just like, gold should be just leading the pack. It should be doing what it's doing at this time of the year, and it's not. And it's whether it was a result of that massive move up to 2100, or nearly up to 2100 at the last year in last August. They said, don't know. But here we are. We're at a really strong level. We've bounced off that level. Are we going higher? I don't know. And I'm really struggling with this. And it's just, some are still running with, like I said, Credit Suisse, even as a half an hour ago before I came on, it was just saying, well, they still believe it's going to run up to 2100. And that's where they see it going. And somebody else is saying, no, it's going down to 1700. And it's just like, make up your mind. They're that's quite a gap, It's not just, hello, maybe we're just smudging, we're close, but no cigar. But this is miles apart. This is 2 different.
We're not quite at that seasonal low yet, though, are we, Ainsley? We got another month or so, another 2-3 weeks before we hit a seasonal low.
We're talking it should be traditionally end of February is where we're looking at.
Yeah.
March post-election. So if you go with the presidential post-election seasonal chart,
Yeah.
March sees
I can't do that. I don't do seasons.
March does a really strong middle of March, from the beginning of March through to the middle of March or to the third week of March, there is a really strong run.
Yeah.
Up.
Yeah.
So that's
inflation's kicking in again, though, isn't it, Ainsley? And this is the other thing about oil, both oil and gold. So inflation's starting to kick again, and that should be enough to at least keep it stable here, shouldn't it?
Do you know what the other thing is that I think has happened in this last week? So we saw down below 17. I think I got into one of my trades. What was it? 1788 or something. That I had a couple of weeks off in January, late January, early February, and I just took a trade the other day, a very small one, onto gold, and that was when it was down below 1800. And I did that because there are a couple of things that are happening with that. That's very interesting. Yes, I've got a very big triangle there. And we saw it last night, and it was the Bitcoin story. So a lot of it was, where's this gold? Where's the money that traditionally goes into gold? And at this time of year, because normally it is all this money, and the US have posted their checks, and the money would normally be going into, as Gordon Scott will tell you, it had been going into the stock market and all the rest of it. In this situation, obviously, it's not going quite into the stock market. The stock market's down. We would normally have expected to have seen some of it into gold. But what we have seen is the speculative nature of Bitcoin, which seems to have been that pseudo backstop to gold, is all you need is a simple tweet from Elon Musk and Bitcoin goes up several $1,000s. And then he says, oh, Bitcoin's looking a little bit overpriced. And it comes down, what did come down? Nearly $10,000?
Mm-hmm.
So I think a lot of people have gone, hold the phone. It's more speculative. It's a wild ride. And you got to have, the big kahunas, as they say, to trade spot Bitcoin. But to do that kind of thing, I think we're seeing a few more people come back, go, you know what, I understand gold a little easier. There's something underlying that. This is just not speculation. It's just not bounced around with a tweet.
Mm-hmm.
I think we're going to see a bit more of that, and especially what's happened in this last week with Bitcoin, because it was wild. That was just wild and vicious and straight down.
Yeah, it was.
It went straight up 2 weeks ago when Elon said, I've just bought $1.5 billion. It's good.
Yeah, it's around about the $50,000 mark now. And it could, but speaking to Shukri about it, we also have a seasonal kind of pattern in Bitcoin, which should weaken about this time, and I guess they're correlated. I guess the move in Bitcoin and or the money between Bitcoin and gold there is a correlation there. I completely appreciate that, but by the same token, I wonder whether, and this is the thing about gold, what I'm looking at with gold, less so silver because it hasn't come down quite far enough, but more so gold. But what I'm looking at with gold is that it's becoming unloved. And that gets me excited. I'm like, this is good because I don't want to trade Bitcoin. Bitcoin's far too pally with investors right now. But gold's become a bit unloved and almost the forgotten child over in the corner. And that's what you want with, in my opinion, with anything that you trade. You want everybody to take their eye off it, and people just not to be noticing it, because I think it's worth building a position in gold, and that's why I've started to get in. And I agree with your approach, Ainsley. To go in here light makes a lot of sense to me. Makes a lot of sense because it means that you're invested, but you're not overexposed, because a drop down to 1700 means, for me, I go in again. And I'm quite happy to buy this one all the way down because it's obviously holding support here. You know, is it, whether it goes up from this point, we don't know. But if that triangle breaks, I think a decent move back to 2000 is on.
That's right. And a lot of, and it's more reports that I've seen prior to this, but the first one today of Credit Suisse coming out saying they're quite happy to get behind gold and it's going to go because it's solid. It doesn't get moved around with somebody tweeting it's overpriced. As one person's opinion, person's opinion, and it sends a commodity, a financial asset down $10,000. That's craziness. That is
absolutely is. Unfortunately, I need to go, but Yellen also did say something similar about Bitcoin as well. So I think there's a few people on the train about Bitcoin saying maybe this thing isn't quite as well priced at this point.
One regulatory authority to say this is over, guys. We're not doing this, and I still reckon it's good night, nurse.
Yeah, possibly. I mean, I'd quite like Bitcoin, but just not here. 35,000 looks like good value to me, which is still a good 20%.
$200 is good value.
Said nobody ever until now.
Anyway, I better go, guys. Sorry, I've got to run. Thanks so much, Ainsley. Always fascinating and brilliant to have you on board. And Jeff, I will see you in the morning, mate. And everybody else, I'll see you in the morning.
Yep.
See you guys.
Catch you tomorrow.
See you, Ash.
Ainsley, the question remains from me.
Yes.
What do you need to see to get interested right now?
At the moment,
when I say right now, I mean
on gold or
upcoming.
oil?
On gold.
On gold? Look, it's still not broken, the 1800. We're flicking around. We're really solid between, if you look for this week, we've been really solid between about where we are now up to 1814, 1815. 1815 was a really heavy level of resistance. Yesterday, 1815, it bounced off that. That's a really strong level. Now, my two main levels are 1821 and 1840. Okay, so they're really strong levels. But look at that. It's gone up, touched that, come back. But you don't see a screaming run down to 1765. We've got a really nice double bottom, 1840. Yeah. In through there. It also, that 1840 level actually also ties up with the 200 moving average as well. So in that area.
Now you're testing me, bloody moving averages.
Oh, don't worry about that. Don't worry about that. Or you can worry about it.
Yeah, go
on. So it's in that neck of the woods. 200 simple on the close. Green.
Oh, for God's sake. Why green?
I'm a girl. You're talking colours.
Okay. Let me make it a bit stronger for you then. There you go. Okay. That's not tying up with my chart. But anyway, 1840, 1850, it doesn't really matter. It's that kind of level. But up through there, once you get up through there, that's when we're going to see that break and up and away. But at the moment, you can see it's gone up and tried to test that 1815 area a couple of times now, but it hasn't come screaming back at all. It's bounced off it, and I think we're going to see something furthermore. But I think basically that inflation, the reflationary issue, and the fact that the bonds are in a different state of play as well, the 10-year bonds, we're going to start saying, we're not talking about interest rates even being looked at until the middle of 2023 with the Fed, according to Powell, but you've got to have something. And I think Bitcoin has proved itself this last week to be quite scatty. I like the word scatty because it's not as reliable. And it's all about the hype and all the rest of it. How to actually harness that. I mean, we all love Shukri. God, he's got that under control, hasn't he? But well, yes, you need to educate yourself. to harness
Yeah.
it. Like everything else, you need to understand it, and you need to understand what you're doing.
That's right. Otherwise, you blow up a lot of money in a very quick, short period of time. But look at that. I mean, we've got a double bounce. It doesn't like that 1765 level, but it's still staying at the moment above the 1800. It came back down and tested an area of break of support last night. Up.
What if you've got a reversal bar there?
Up a bit more.
Okay, where am I going?
Up a bit more with that one.
To the bottom of that bar?
Yes, there.
Yeah.
Yeah, so in through there, look at that. And that came back, it retested that after it had broken higher. So we're in that, it's a ring low. We've got a really neat little ring low happening there. And it's come back and tested that level of the support become resistance, that level, and it's going on. 1815 is a strong level, 1821 is a strong level, and 1840 is a strong level. So coming into those levels, let's see, but I think gradually, let's see what happens in March. If the seasonal bias for gold at the moment, we could see that ramp back up, especially if there is a decline. If there is a decline on the on Bitcoin and it drops further, money's got to go somewhere. It's got to go somewhere.
Okay, so a pullback here is okay, or no? You still want to know more?
That's fine. Yeah. But I would say even if we get a pullback or not even that high, even that low, it will continue on its merry way. It's just been sitting in that level. It's just been bouncing around in that level for the last couple of days. As you can see, last 3 days, it's going up, it comes down, it goes up, it comes down. But the fact that I can't even get the analyst reports to even be on the same page as far as the direction goes and where they think gold's going to go is, I think we can just safely say, not sure.
I'm going to say, why would we listen to them?
Some of them have been spot on about, especially last year. There were a couple that I was following, and the strength, but by the same token, it's one that I listen to. I look at some of the other bits and pieces that are going on, but seriously, and these are the guys, when it comes to gold, the reports that they release is a reflection of the trades that have already been done in the back room. Okay, the gold market, whilst it's large, is also collaborative, if you like. So a lot of the big traders.
There's a word.
Yeah, you don't want to say that too loud, but
no, it's dangerous. Yeah,
it's dangerous. But they get an idea of, and there's a sense of who's doing what and what they're doing, and that's not unusual. It's not unusual.
Okay, right. So what you're saying, they're not chart analysts as such. They're actually people who have a little bit more information available.
There's a lot more information, and they're across what's already happened. Like I said, by the time you get the reports and what you're reading in the news waves, you can't even think to grab a trade down at 1761 because whomever has done this huge trade on gold to push things up again. But by the time you get the report the next day that's come out through the analysts, their traders have already booked the trades. The money's already done.
Okay, so let me summarize. You're not ready to trade at the moment.
Not a gold. I'm just flapping around to seeing what's happening there, because look at that. Have you got any clear direction?
Yeah, look, I'd be happy to trade it off the bottom with a higher low, definitely.
Yeah, but right at the moment, it's just sort of flapping around, and it's been flapping around in that level. I can go off and have a girls' lunch and come back, as I have, and it's pretty much in the same spot I left it. 3 hours prior.
Yeah, it's not exciting, is it, when that happens?
It's not exciting.
All right.
But
So
anyway.
we're going to get out of here very, very soon.
Yeah.
So
Yeah.
thank you, mate.
Sorry, been
Much
flapping
appreciated.
on.
So again, flapping on.
Flapping on, but
Good
it's
on.
been a lot happening as far as what's going on and all the rest of it.
All right, pound's doing absolutely nothing as well. The Aussie's doing absolutely nothing as well. Guess what? We don't have a market right now, guys, at the moment.
No.
There's
But
probably
Pal,
something moving. I don't know what it would be. Let me have a look at dollar yen.
I think Pal, what Pal has said, people are absorbing that to see what's going on. See what's going on with that? Seriously, I was thinking it should be a sell.
Who? The dollar?
No, dollar yen.
Yeah, well, I did place that order, but I'm now cancelling it. That's Gonski.
Yeah, it should be going down, and it's not.
There'll be a better price. Well, that's dollar yen's got that little idiosyncratic stuff about it. It just does what it wants to do rather than what you anticipate.
No, the central bank does what it wants to do, especially when it gets too strong. The central bank does what it wants to do.
I'm now of the opinion that what I said earlier today was I'm going to take that as a test of the trend line. Now I'm going to take that back and I'm going to say we're going to test that trend line and then I'll start to look for shorts. But this is a very, very strong level and I want to trade from here. I definitely want to trade from here.
Yeah, I want to trade him short too.
I now much prefer to see a false break of this trend line, similar to what we had up here and here and here.
Yeah.
If I want another one of those, then I'm in like the proverbial Flynn. Okay, let me check the questions box. Have we covered everything? I think we did. They won't force. Yep. Well, nobody said anything for a while. Everyone's gone quiet. Okay, all good. Checking. Nothing. There's nothing to do, guys. There's no market here. It's just very, very quiet. So we will say hooroo.
Adios.
What did you say, eh? Adios. Okay. And I'll say my usual. Have a good one, guys. Have a great rest of hump day. Bye-bye.